Thank you very much. All right, we're excited to be here as a panel. My name is Bidlack. I am the co-founder of SesameOpen. We're a liquidity-centric blockchain protocol. And as you know, this is a panel all about liquidity. And I am excited to have some of the leading experts, people who have studied and driven the trends around liquidity for a number of years now on the panel. And so we're going to have a pretty wide-ranging conversation about liquidity. And so I feel like without further ado, we should do some introductions. So Alex, why don't you give us a start, kind of a quick intro on you and Aurora IDEX.
Great, thank you. My name is Alex Wearn. I'm co-founder, CEO of Aurora. We're best known for our decentralized exchange, IDEX. IDEX has been the #1 decentralized exchange in volume, users, transaction count since January 2018. Also the #1 Ethereum dApp during that entire time as well, with 80% more transactions than CryptoKitties. So we've got a lot of stuff to share with you guys today. Excited to talk about what we've learned in terms of getting liquidity on the platform, as we think that's been one of our secrets to our success.
Excellent. Mike?
Yeah, Michael Dunworth, co-founder and CEO at Wyre. Wyre is an infrastructure provider to fintech applications, dApps, crypto brokerages, exchanges. We connect the bridge between the fiat world and the crypto world in a compliant way. So we handle all the, the banking connectivity and all the AML and KYC components that come with doing that compliantly. Part of that is taking care of liquidity. So we aggregate multiple centralized exchanges, looking at decentralized exchanges, OTC desks, mining organizations, and things like that.
Excellent. Dr. Sao, a little bit about you.
Yeah, I'm Henry Cao. I'm a co-founder and the CEO of Usechain. I'm also professor of finance at the Cheung Graduate School of Business. The Usechain was the first in China to have hidden identity in the blockchain, so you can have privacy and when you do transactions. But at the same time, if the government wants to go after the transactions, they have a way to trace all the transactions. So we satisfy the KYC and ML requirements in China, and we are testing some real scenario models like tokenize the prepaid cards, the coupons in restaurants, in hotels, and also try to implement blockchain technology on insurance companies. So we were listed in BTC and KuCoin last year, and we hopefully the blockchain can be used in the real economy rather than just doing trading all the time. But we believe that the real benefit of blockchain is to improve trust in society, and Usechain can contribute in that direction.
Excellent. And last but not least, Yao?
Hi, this is Yao from Trade Terminal. We're one of the world leading hedge fund in digital asset. We provide liquidity. We manage about thousands of BTC of the clients and ourselves. And we employ very good infrastructure based on execution, data, and strategies to pursue higher returns and higher Sharpe ratio for our clients.
Excellent. So as you guys can tell, we've got a mix of makers and exchanges and a lot of different pieces of the aggregating of liquidity kind of value chain throughout this, as well as from the identity side. So I want to start with current state a little bit. There's no secret we are working our way out of a bear market, I hope. And I guess I want to get you guys as a panel's current take on liquidity. Are there any particular asset classes, parts of the world, types of investors, kind of where are you seeing strong liquidity, if anywhere, right now? Yeah, why don't we start with you?
I think well, realistically, if we based on statistics, it's going to be BitMEX is the world's leading liquidity exchange, and Bitfinex and all these. But if you want to bet on the future, you want to see what liquidity can be added into the pool. We're looking at 2019. I think some of the worlds, maybe let's say Japan or other countries. We know that last year, 2018, I think Standard & Poor's didn't do so well, especially in the toward the end of the year. So we probably going to hit a downturn in real economy. So I think part partially that liquidity or partially the money has to go somewhere. If some country's currency or something happens within 2019, say for example, last year Turkey, they suffered a big inflation. And for Argentina, Iran, that's the case. If you analyze the Bitcoin price at the time, people want to escape from that liquidity pool. That's a liquidity pool, right? Bitcoin is another. And if they are accessible to that liquidity pool, I think it's going to direct a lot of liquidity into Bitcoin. Yeah.
Gotcha.
Dr. Sao, what's your take on this?
I think in all bear markets, the liquidity dries up. It's much worse with the cryptocurrency. I view that many of the kind of currency may not survive. If you look at the top 100 cryptocurrency 5 years ago compared to the top 100 now, it's hugely different. So my view is that basically in the long run, there may be only 1 or 2 cryptocurrency which have the storage value, or others without actual applications will die out. So basically, to improve cryptocurrency, from a finance point of view, we have to introduce more customers into this market. So basically, get new money in. Right now, if like Goldman Sachs come in, I think just the liquidity is going to come out quickly. So,
Michael?
Yeah. Well, I mean, the market's down, so things aren't as speculative, things aren't as frothy. So when you have that happen, basically, people are still like really trying to sink their teeth in to get that volatility, which is why people get excited about crypto, because it's basically like a casino. So trading crypto when there's tons of volatility is really exciting. When there's no volatility, I think what you're going to see is, and we're already seeing this, but a really big shift towards derivatives and instruments. That's how people get the hit, so to speak. If you look at the Forex market, you're trading like the USD to Euro at a bank or something, they're going to be like pouring 100x leverage on that just to get any kind of reasonable ROI or trading value from it. So you're going to see a ton of people, if they're US funds, they're moving offshore if they haven't already, and they move offshore because there's not enough access to different types of instruments in North America, largely due to the regulatory sort of barriers that come with it. So, Kraken's got a 28-day long or short. That's auto-liquidated after that. But if you go to BitMEX, it's literally like walking into Vegas, and you just go 100x leverage, high, like whatever you want to do. So I think that's going to be the theme, derivatives and moving things offshore.
Excellent. Alex, what's your take on current liquidity state?
Yeah, I think the BitMEX is definitely indicative of what some of the customers need at the moment or desire at the moment, which is that opportunity to be highly leveraged. Their growth in the last year has been pretty spectacular to watch in comparison to every other exchange or trading platform and the broader decline in the market. I think another thing that we kind of look at that we find interesting is the size of the OTC market. The fact that the estimates of 2 to 3 times the daily volume of what's traded on kind of open exchanges is traded on the OTC market. In speaking with those customers, a lot of it's about trust in terms of not trusting some of these exchanges to manage the custody process. I think we probably will see a big exchange hack sometime in 2019. It feels like it's been a little long for one of those, and we're about due for it. And so that's one of the things that we think as the technology starts to grow, and in particular as you start to see more evolution of smart contracts and cross-chain kind of connectivity, that'll be interesting to see how much of that starts to migrate to systems which allow parties to do trades of that size or to trade with each other without having to give up custody. This idea of if you want to trade on Bitfinex, the first thing you do is you choose Bitfinex as your custodian, and there's many people in the market that will not work for, and I think we're starting to see the evolution of the technology that will allow that to change.
Excellent. So, let's think about 2019 for a second here, right? So 2017 felt like, from a liquidity standpoint, the year of the ICO a bit. 2018, maybe the year of stablecoin, I don't know. What do you see 2019 looking like? Alex, let's start with you and bring it back this way.
I think you're going to see a continued growth of, I don't know what to call it, flagship assets maybe, right? So more focus on Bitcoin, Ethereum. Stablecoins, I think, are going to continue to grow because it just makes sense for cryptocurrency platforms. It's a much easier way to move that side of the of the liquidity around, if you will. One of the things that really fueled Tether's growth was the ability to rebalance across exchanges much faster. So if you think about if you're trading USD for Bitcoin, if you buy Bitcoin for an arbitrage opportunity that you see on another exchange, it takes a couple hours to move that Bitcoin to the other platform and sell it for USD. But now you're in USD, which is going to take multiple days in wire transfers to move back to any other opportunity that you see. So once they tokenized that side of the trade, you started to see spreads get a lot tighter on these various exchanges because it was much easier to move those assets over to other platforms. So I think you're going to see just more growth of that because of the utility it provides to the exchange space. Lastly, there's a lot of excitement around security tokens. I think that's going to be a little slower than people anticipate, just because of the fact that they're trying to go, well, by default or by definition, it's a regulated product, and it's going to take time to get regulators comfortable with the fact that this can actually be regulated by the technology itself. But I think that you will eventually see potentially this is mandated as a way to issue a lot of these securities instruments, because it goes from the oversight process goes from an audit-based one where you check in periodically to make sure things are working as expected, to one where it's built into the technology itself. And if you have things such as a 1-year lockup or a limited number of investors that can hold this asset, all of that can be programmed into the asset itself, and it's going to make compliance a whole lot easier.
Michael, where are you on this for 2019?
Yeah, I think you are pretty much spot on exactly what Alex said. Everyone got a whiff of stablecoins. For the other side of stablecoins, you've got industries, or you've got like institutions, or banks or exchanges. This is like an exceptionally easy way to vacuum assets under management. So when you're an exchange, you're holding customers' funds. You want to be holding as much funds as possible, depending what your motive is, but you want to hold as much funds as possible because your bank is going to be going and giving you interest rates on the more you hold, the bigger the interest rate. So people are going to jump on this. We were talking about it in 2017, and then we had last year we saw True USD came in and bid off the market, basically saying we're Tether, but we're legitimate. And not that I don't think Tether's legitimate, by the way, but more like they just saw the writing on the wall. It was free money. So there's going to be a ton of that, and people are going to start offering incentives to store your assets with a particular person. So you're going to get an incentive to move money from, let's say, USDC into PAX or PAX standard and vice versa, and people are going to use it as a means of attracting more capital and increasing their savings rates.
And Dr. Sao, from an identity and kind of blockchain perspective, project perspective, where do you see 2019 liquidity?
So my view is that the liquidity can be very broad. So essentially, the blockchain can bring liquidity to the non-tradable assets like your human capital, your loyalty points, the prepaid cards, the right to have stay in a hotel for one night. All these now can be traded assets, and I think this will be lots of growth in the actual application of blockchain, that in tokenization and bring liquidity to real assets that was not tradable in the past will be a big application in 2019. And then we are doing a lot in China on that in the hotel stays. You have fractional shares of a hotel room, can have a timeshare, and you can have loyalty points or prepaid cards in the restaurant, in the entertainment, the interaction between the stars with their fans. My view is basically, I think the 2019 will see lots of growth in that area.
And now you're managing a significant amount of liquidity. So where do you see yourself deploying that, or where do you see 2019 looking like?
19 would be the year of infrastructure. We're looking at the market. See, we have this chain. We have this prediction market, for example. With this prediction market, the business model is very simple. I gamble whether I say I'm a farmer in, I don't know, somewhere. I want to gamble the percentage. I want to lock in my crops yield this year, but I want to eliminate the risk of a hurricane or a tornado hit. So I want to put my money into this prediction market so it can benefit my yield, my crops. But what do I use? I use Ethereum. Ethereum decreased like 80%, 90% last year. So the decrease of it's actually better for a hurricane or something to hit me. So we're going to see, that's why we're going to see a lot of, well, from people's view, we see that we think it's going to grow in one day, but we need stable coins for sure, and we need stable coin that have like settlements capacities, like Ethereum, smart contract on stable coin, this kind of thing. Say I'm a hedge fund manager, but our clients, we have hard time to present our yield, to present our to disclose our performance, because there's hard to find a custodian, it's hard to find trade and Meng, it's hard to find well, where do I deposit the money? I deposit them in, I used to deposit in Mt. Gox, but they're gone with my money. And so who do I trust? And the custodian, well, it's all about branding. And for now, we haven't seen we see bigger names moving very slowly into this market, but we would see this infrastructure growth, I think, in 2019. Same, I think it's with the 2000 Amazon or these companies, they're already there. Their ideas are very good. You shop online. But the infrastructure, say USPS, UPS, FedEx is not delivering for a good price, and their system is not digitalized. You need 10 years or some years to grow this market. Yeah.
Excellent. So we talked about STOs a little bit as part of this, which kind of, the timing undetermined, maybe this year, probably starting this year and then heading forward. I think, it was a great panel before this that talked, went into that a bit more. If there's a huge proliferation of STOs all of a sudden, right, and there's a great number of them. Alex, kind of a question for you. Like, what do you see the role of a DEX or an exchange providing from a liquidity standpoint if there's now hundreds of thousands, millions of tokens created through this STO process? What does that look like from a DEX standpoint?
So if those are unfamiliar with what the term DEX or decentralized exchange is, the idea is that on a traditional centralized exchange, in order to trade cryptocurrency, the first step you have to do is to send your cryptocurrency to a wallet that they control. You're essentially choosing them as your custodian. The idea behind decentralized exchanges is that by using some form of blockchain technology, you can have the trade actually be direct from one consumer to another, or from one institution to another. So there's no counterparty risk in terms of that third party holding the custody of funds in that intermediate period. So in terms of the role with security tokens in decentralized exchanges, it's actually a really good fit because it kind of falls in line with this idea of programmatic transfer. The idea that security tokens can have regulation built into the asset, and then that regulation can be ever present, if you will, whenever there's an attempt to transfer it on the blockchain or trade it with another individual. If it's within a centralized exchange, that exchange needs to be aware of any restrictions and enforce it themselves because, as I mentioned, they're essentially just holding it all in an omnibus account. But in terms of the role that DEXs would play with the growth of security tokens is, I think, they're a perfect match. The challenge is on the UX side of decentralized exchanges. So there's a reason that people all think that DEXs are the future, but they're a very small percentage of the market today, and it's because of the usability aspects. So I think that's just going to be similar to security tokens itself. That's going to take time to either solve from a technical perspective or from a regulatory perspective as well. But I do think that's kind of, if you extrapolate it out, that's kind of what the future looks like. Is instead of having different exchanges be custodian and exchange, you're going to have different custodians that plug into, call it an exchange platform or network that they use to trade assets with each other without having any of that counterparty risk. So it's going to look more like traditional finance does, with a bunch of custodians routing orders to different exchanges, but instead of it going to DTCC for settlement, it's going to be settled instantly via the blockchain itself.
And Dr. Sao, from your perspective, as the world tokenizes, right? How would those individual tokens find liquidity? Like, where are they going to go to? How are they going to promote their particular token in order to find that liquidity? What do you see that world looking like when there's a huge number of tokens out there?
Yeah, so my view is that if the tokens have some kind of fundamental value supporting, like suppose they have loyalty points become tokenized, and if you cannot trade it or the liquidity is not good in the secondary market, they can still use consumption to support it. That's going to increase the liquidity. And also, I think in addition to the security tokens people talk about, basically you want to have the sort of similar to IPO, that the place to raise money. I'm also thinking maybe some of the individual stocks can be tokenized as well. So for example, you can have Alibaba have a token, and then it's easier to have futures traded on that stock directly, and then that's going to increase liquidity, not just only for the security token, but also for stock itself. So my view is basically not just the non-traded stocks can be tokenized, but even traded stocks can be tokenized, especially for Chinese financial market. It's very difficult to short a stock in China. But if you can tokenize those traded stocks, and then you can have in the futures on individual stocks, that can be another way of designing the security token for traded stocks.
So I know the panel has some thoughts on what's inhibiting liquidity right now, especially both institutional and retail side of things. So Yao, you're working with a number of institutions and high net worth individuals to bring liquidity into the market. What are you hearing from them? What's stopping them from pushing even more liquidity in?
I think it's the unclarity of legislation from the regulatory perspective. People are, say, government wants to get in, but they're not going to get in one night. It's very prolonged. It's going to take, I think, years of Fidelity. They build a trading team, and they help facilitate custodianship, but they have to study how blockchain works, how Bitcoin network works, and how a multi-sig wallet works. That's going to take a very long time, I think. And this is one point, and the other thing is we see maybe the government side. SEC just got U.S. government just got shut down, so SEC is on. They don't have money, so this kind of thing it's very slow, and it's going to take, I think, at least half a year to 1 year for bigger entities to at least enter this market with a multi-$100 million check size, at least half a year.
Gotcha. And Mike, what do you think? So you're obviously working with a number of institutions as well, aggregating. What are you hearing from those institutions agreeing with Yao or different?
Yeah, I mean, the reality is 2017, when absolutely mental, everyone was making, BitMEX was making $3 to $5 million in revenue a day at one point. Any institution, Fidelity, bank, Chase, doesn't matter who you are, if you are in financial markets to any extent, you are almost being negligent or negligible or whatever it is by ignoring this. So they all piled on a bunch of how do we get into this market? What's the easiest, fastest way to start getting some of that $3 to $5 million revenue a day? Fastest way is OTC trading. So Fidelity, JP Morgan, Goldman Sachs, and Barclays put together teams, and as they were they got the ball across the line internally, and they really about to get there, the market tapered off and the party stopped. And so I still don't think they're going to be here, or that kind of they're not going to have a lot of presence until the market comes back. Because if you're them, they're not going to start force feeding their clients Bitcoin or trying to, they might try, but I don't know how much the success are going to have, because no one's demanding it. Their customers, broadly speaking, aren't demanding it. So the moment those demands come back, they'll be straight in. They missed the boat last time.
And Dr. Sao, from an identity perspective, what role does identity play in terms of bringing liquidity into the market? How does that really function, and how does that help enable that liquidity?
I think with identity, it helps to be compliant with the government regulations. for that, I think that's must for the institutional investor to come in. I talked to a friend who is a CEO of in charge of about $240 billion. So why aren't you get into this market? I think there's lots of money to be made. But well, I think they're worried about regulations because for them, if they get a penalty, a fine from the SEC, that can be huge. Deutsche Bank was fined for $16 billion. For non-compliance. So for them, the compliance is a big issue. So with identity, we can solve this compliance issue. And with identity, we can have individual investors, companies that can issue their own tokens. And if you are successful, let's say you are Michael Jordan, right? You can have Michael Jordan token. Then his brand is very powerful. So my view is with identity can be only your IP, intellectual capital, can be embedded in this token, and your human capital, your kind of labor in the future can all be tokenized. So my view is basically with that it can reach to lots of people, and only when let's say, why the internet was successful because after a few years, almost more than 50% have an email. But now you ask people, do we have a digital wallet? And most people don't. So I think this needs to be, I think it takes time to build. And identity can help that.
Yeah, Mike, what do you think?
Sorry, just back, I know this is, I just forgot. Talking about trends this year, I think a humongous one is going to be basically Robinhood for everywhere. So whatever is in Robinhood, people are going to be Oracle, taking Oracle and just proxying it in. Show of hands for anyone here that owns a stock. Does anyone here own a stock? Put your hand up. All right, 4 people at a conference they own. Okay, but basically, if you own it, I don't know the last time you guys exercised your rights as a stockholder and you went to the Apple annual general meeting and you said, you know what, actually, Tim, I'm not really happy with the strategy you took to roll out iPads in Asia Pacific. Nobody gives a shit about that, literally. So you're going to have basically the same thing, which is following the price ticker of an Apple stock, but you're going to be in Nigeria, Angola, Venezuela, wherever it is, and they're going to have access to basically Robinhood anywhere, but just not with the pain in the butt of regulatory compliance and burden. So I think 20 Robinhoods. Unrelated to the question, sorry.
Excellent, no worries. So I want to talk a little bit about economics for a second, and token economics particularly. So I have a thesis, that we essentially that there's a continuing shift towards evaluating token economics and the fundamentals much more than there has been ever in the past, largely as a result of a flight to quality in the market. Does that resonate with each of you? And if so, how are you actually seeing that manifest itself? Alex, maybe I'll throw that to you first.
So I think that 2017, 2018, there was a lot of experimentation with token models. Some of them, the idea of a fee token, for example, that's pretty much dead. The concept was, I'm going to launch this competing app against Uber. It's going to be putting drivers and riders together, and they're going to pay in this token. And that's going to be the native currency of this network. And if you kind of dig into that idea, that construct, there's no necessary reason that any value should flow back to that token as a currency. So people have started looking at how can we design a token structure that incentivizes the network to perform and move in the direction that we want, but also has some way that value flows back to the token. So one of the ones that seems pretty promising is this idea of a right to work token. The idea, an example would be, for example, a chair at a barber shop. So there's this entity that's doing some work, and people are maybe lending computing power to make this network operate. And for doing so, they're getting paid a percentage of the fees that the network collects. Something similar to the way mining works with Ethereum or Bitcoin. You're lending an actual service or doing a service that's required for the network to operate, and you're getting paid to do so. So I think that's one evolution. Another one is just take what works in finance and tokenize it. I think that's going to happen. It's a little less interesting because it's kind of taking existing business models. There's going to be a benefit because I think it's going to be compliant, it's going to be easier to do, and there's going to be a liquidity premium because one of the viewpoints is that the reason this is going to be successful is not because it's needed here in the US, but because it's a way to bring structured finance and products that have the regulatory backing of the US to the rest of the world, to areas that have access to internet, but maybe not kind of an organized regulatory structure to create this kind of structured finance. And then the last segment that is probably the most fascinating is something like Bitcoin itself, which is a new form of currency. It's got an opportunity to be a more sound form of money. It's a deflationary currency, which we haven't seen in a long time, and it's got a set issuance. So is that a competition to government-issued central bank currencies? I don't know where that goes, but that to me is one of the most exciting things to watch. This idea that we now have a competitor to government-issued currencies where central banks, their mandate is to control the supply to balance inflation with unemployment of a particular country, right? That's kind of the stated goal of the Fed, which is great for the US because we're the reserve currency of the world. It's not so great for other central banks when the US central bank policy screws up everything that they've been working towards, right? So I think Bitcoin is just fascinating in that sense. I do think you'll see some sovereign governments potentially adopt it or at least purchase it and maybe start to use it as reserves. You're going to see more financial institutions starting to acquire it. And as that grows, I think that's going to be one of the most fascinating aspects of the space.
Excellent. Mike, what are your thoughts on token economics, current state, and sort of how there's been a change there? And what are you seeing there?
Yeah, I think the current state of token economics is pretty poor. Like, I think the people that are doing it are not the right people to be doing it. I think there's a handful of people, there's a handful of examples of actual well thought out incentive models. You see teams that are, they're talking about hiring the professor and the Nobel Prize winner of economics and all this shit. Pardon my language. But like, the reality is you don't want that. You want to go down the road, or literally down the road from here, you want to grab 5 developers from Zynga and you want to go, hey, tell me about all the different environments that you guys have built, because that is practical application. They have built and scaled Farmville and all these kind of Clash of Clans. All these things are miniature economies that have multi-party incentive models where it balanced out and it worked. That's why I was talking to a friend of mine from Uber a couple of years ago, and we were talking about a similar thing with ride-sharing economies and how do you make it so that everyone's getting the most. Uber's getting sort of this, Uber's making it from a business, they're growing, the rider's happy and the driver's happy, and then shortly you saw Uber go to game studios and they hired about 20 developers to come in and make sure that their economic models are right. The other thing is, if you don't have multi-party incentive models, you won't have a decentralized system, period. It is impossible for that if it is lopsided. It's like a boat rowing. If you're rowing with one oar, you're just going to go around in circles and you're not ever going to move forward. The SEC and the CFTC, with their sort of opinion on Ethereum, they said that it was sufficiently decentralized and that Bitcoin was obviously very decentralized in that same way. You can't get to that point, it's a sort of ironic, but you can't get to that point unless everyone involved really wants to be involved. Like, you've got to have them wanting to put as much firepower at it as possible, like selfish incentives. So right now, I think this whole premise of everyone running around saying we're a utility token, we're not a security, our token gives no return on investment is like, that's like absolute lunatic, like that's a lunatic thing to say, because you actually want your token returning in, like giving a yield. MakerDAO, for example, while it's not a yield, it is doing the mint and burn stuff. You can't get to decentralization like that, which means you'll never be unregulated, which means you'll get regulated basically into the ground from the SEC or the CFTC. The only ones right now that we look at Wyre that are really well thought out, I think would be maybe MakerDAO, LivePeer, Republic Protocol, and then Augur as well. But people need to put more work into that, way more work.
Gotcha. Dr. Sao from
So I feel that actually many of the directions last year was on the wrong track, because you don't need a decentralized blockchain for every application. A restaurant does not need to kind of build a blockchain to start to distribute their tokens. So my view is an N+1 model. You have one is the infrastructure, is the blockchain, but the applications can be centralized in its flow. When you do an actual transaction, I'm to come here for a piece of meal, why don't I record on the blockchain? It's not necessary. But if my inventory, I have like millions of dollars, and I want the security, I want the safety, And then I want to put it on the blockchain so that it's like I have more trust because the blockchain brings us trust. So my view is that basically there should be a mixture of the centralized applications and a decentralized public chain. And for the inventory, you need that for do that on decentralized blockchain. But for actual applications, the flow is not necessary. So then we can see actual applications to be useful. So my model is called N+1. So N applications on a decentralized blockchain.
Excellent. And Yao, from a quantitative trading standpoint, what role does token economics play as you think about the trading strategies that you employ?
Well, we just trade on the exchanges and make money. It's a very simple business model.
All right.
Time's up. Yeah.
We're at the end of time, so I want to just ask one last quick question of each of you. So tons of people in the audience, tons of people walking around the conference. What's the #1 thing that you want to talk to people about while you're here at the conference? Yao, why don't you start?
This is very alike 2000 in internet. Have faith. And,
Excellent. Dr. Zhao, what do you want to talk to people about if they come up to you in the hallways here at the conference? What's the #1 thing?
One thing is basically, I think 2019 was the more applications. So I think applicated depths and the real kind of societal use of the blockchain will be more important in 2019.
Mike?
If you're talented and looking to work, I'd love to talk to you about that. If not, if you think we should work together, I'd love to talk to you about that, or just hear about your day. So, yeah.
Alex, what do you think?
We just launched the first phase of our staking network last night. So if you want to learn more about that, come talk to me.
There you go. Quick round of applause. Go talk to them about that,
one more
folks.
thing.
I had no idea.
Yeah, just one more thing. We're hiring too. Yeah.
Yeah, I was hiring too. So thank you. Enjoy lunch, everyone.
Already.